The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Thank you for joining us today on our town hall meeting in Prince Edward Island about COVID-19 and an update from Restaurants Canada. My name is Luke Erzsébek, and I am the Regional Vice President for Restaurants Canada. And I appreciate you taking time from your busy day to listen to this webinar. We really are in unprecedented times here in Atlantic Canada or the globe in terms of what has happened since March 15th. Many of your businesses have been shut down completely, or if you're allowed to open, it's just, takeout and delivery only. We're here at Restaurants Canada, and I'm proud to say that we partner with the Tourism Industry Association of Prince Edward Island and the PEI Restaurant Association. We work in partnership with both those organizations. And our job here at Restaurants Canada is really threefold. The first thing we want to do is measure the impacts and understand the impacts of COVID-19 on the food service industry on the island and bring those to government. Without the facts and without government understanding what exactly has happened to the industry, there's no way they can change policy. And I think you'll all recognize the work we've done in that area in terms of some of the media articles you've seen or press releases about our 3,800 job losses on the island and how it's impacted every single community from coast to coast. We've made government acutely aware of the impacts. And I think that's recognized when Premier's Recovery Commission has 2 restaurateurs on his Recovery Commission. Our second job at Restaurants Canada is to work with government on measures to help our industry. I work, pretty much daily with the government, feeding into government, bringing them information, providing feedback, providing insight as they developed their assistance programs to employees and to businesses. And I have to admit, the PEI government has done a really good job at getting out there first and foremost. They're quick, they're flexible, they're innovative. And when I compare it with some of the other provinces in Canada, I have to say they've done a pretty good job at trying to mitigate the damage to our industry and our employees. And last but not least, in terms of our job, is we want to work with governments on recovery plans. This crisis is going to end at some point, and we are going to have to reopen. We will never reopen, flick a switch, and like it was last June or July. It's going to be gradual. There'll be restrictions. There'll be risk mitigations. And, we are working closely with government to provide insight, provide guidance in terms of food service, because, as you know, PEI has released a recovery plan from the Chief Medical Officer. And we've already begun to feed into that plan and provide our perspective on, how things should change, how we should work with this guidance document. So, that being said, I think I'll jump right into the presentation. There are really four things I'd like to talk about. Number one, just give you a little brief insight in terms of what happened to the industry, to set the table on why government had to react. Number two, I'll talk a little bit about some of the higher profile federal programs that you are probably using and accessing for you and your employees and maybe answer some of your questions. Thirdly, I'll talk about some of the PEI programs. And fourth, I'll go into recovery and what we're doing to help the industry as we move into the recovery phase. I'm happy to take questions that you can either, click on the chat bar on the side and the question will get relayed to me. Or if you want to wait after, my email address is on the front cover of this presentation. And feel free to email me. And if I know the answer, I'll get back to you right away. And if it's going to take a little time to find it, I'll find it. And if I don't know the answer, I'll find out the answer and get back to you. So without that, let's move right into the numbers. So we survey members quite often from coast to coast, and generally we get about 13,000 responses or responses that relate to 13,000 establishments from coast to coast, which is a pretty good sample size. And the PEI results generally reflect what we see happening in the rest of the country. If we look at the middle of February, no one really even knew what COVID was. We heard about some strange disease in China, but the industry was already seeing, about half the industry was saying slower sales or reduced same-store sales. That was most really related to a slowdown in the economy, high household debt, and we'd seen several quarters in a row the economy was shrinking and food service sales were not as robust as they used to be. COVID really did not have any impact in the middle of February, other than some few targeted areas such as Chinatown in Vancouver or Chinatown in Toronto or Calgary, where we saw a big drop in Chinese restaurants, who were celebrating the Chinese New Year. So that would be the only sector that really was impacted by COVID-19 back in mid-February. We then moved on to mid-March. That's when we first announced the closures of our establishments and a movement to takeout delivery. At that point, and we surveyed, just about the same weekend that the closures were announced. So we didn't really feel the full impact of COVID, but we were already feeling, what was happening in the community at large. People started to be concerned about COVID. It was becoming common knowledge. People were less apt to go out. There were some restrictions on foreign travel that we definitely, there was a solid impact on the industry. Moving into late March and the first 2 weeks of April, most of your businesses or all of your indoor dining was forced to close, and nearly 100% of the industry saw a decline in sales. I'd really like to know that 1% or 2% who said their business actually went up during those weeks. I'd like to meet them because I'd be interested to know what they did. Moving on to this, the absolute sales numbers. As I said, the first half of March, you were open, but sales were still down approximately 30%. The second part of March, sales declined by 72% for a total March sales decline of about 50%. So what we saw in general, we saw, full service restaurants generally closed. They went down 100%. Then on the other hand, we saw the quick service that were geared up for takeout and delivery. That was a regular part of their business through drive-throughs, through takeout, tend to be the quick service establishments. They were down to the 50 to 60%. And then we had a few that were trying to stay open, with a little takeout delivery. They were down 90 to 95%. So all in all, it averaged somewhere between 70 and 80% decline in sales that the industry experienced in the period of end of March moving into April. That resulted in a 3,800 person decline in the industry on PEI, and which really impacted every single establishment in every community on the island. And we are so important to the province, and there definitely was an impact. Moving on, Roberto. When we look how the businesses reacted, so we're looking at operators that only own one unit. Nearly 50% closed down, and this survey was taken the very first week of April. So we saw about 48% or half of all restaurants closed down all their operations temporarily. We saw about 38% or 40% roughly stayed open, just doing takeout and delivery. And surprisingly, in this short period of time, about 2 weeks since the emergency order, about 8% of businesses had already decided to close permanently and never reopen again. That tells you how close to the line the industry is. And 5% of the businesses of the respondents had not opened yet because they're seasonal businesses. Moving on. So now I'll briefly go into some of the federal measures and some of the federal assistance programs that many of you are very aware of and have accessed either for your business or your employees were aware of. But when COVID first hit and the closures started to happen and emergency orders came out, we were very engaged at the federal level in terms of making sure our businesses, stayed open, and we had a safe and secure access to food. We were concerned about the border, we were concerned about food supply, and we worked closely with the federal government and the trade departments to make sure that essential foodstuffs could cross borders federally and provincially. It was really important, and we're also happy that the federal government and hence all provincial governments looked at us as an essential service and allowed us to keep a part of our businesses open. The takeout and delivery. It was necessary to do that because we took some of the pressure off the food supply chain in terms of grocery stores, and we also gave access to food to truck drivers who are driving through the night to supply everything from health equipment to groceries to whatever. First responders, healthcare workers, those in self-quarantine really relied on our industry and still does to feed them. So I think as an industry, those of you who remained open, many of you at a loss or at marginal at best, we and the government, has recognized you as heroes for staying open and providing these essential services, because it was difficult for you as an operator. It was difficult for your staff, and you stayed open and provide this essential service. So congratulations. Moving on to the assistance programs, once the supply was secured, the first benefit government came out was with CERB. I think most of you are absolutely familiar with this program. It provided $2,000 a month for up to 4 months for workers who lost their job or their income as a result of COVID. I think a couple of key points to remember at this one is that, in order to qualify, you have to have $5,000 of income in 2019, and you have to have been laid off or told you have no work. You cannot quit your job and get CERB. It's also important to note that this is administered by the Canadian Revenue Agency, not EI, and this was for ease of access, as well as to cut down on fraud. So the government at tax time will be clawing back money from any employees who got CERB, who didn't deserve the money they got for some reason. Either they had a second job or didn't qualify. So when you have the linkage for CRA, they can easily look at your tax returns and CERB, because CERB is a taxable piece of income. We were happy to get one important change in the CERB program, and that was the ability for someone on CERB to earn up to $1,000 a month while collecting CERB. We felt this was important because, particularly for people who earned lower wages, there's an advantage to just stay home and collect CERB rather than go to work. So we argued that if we had an incentive, the employees have an incentive, they would come work, at reduced hours or for a shift or two for businesses that were trying to stay open. So it was win-win for the employer and the employee. So the government introduced a measure where they could earn up to $1,000 a month. Moving on. The next piece that came out was the SEBA account, or the loan program. Once again, I think this is probably one of the most popular programs put forward by the federal government. It is essentially a small business loan used to pay operating costs such as payroll, rent, utilities, insurance, property tax, debt service. It's 100% funded by the government, but offered through your bank, your credit union, or the BDC. It's important. The bank and the BDC or the credit union still have final say whether or not you get the loan. So, that's an important note, because some people have had problems, and, it's worth to shop your business around or pressure these agencies. When it was initially introduced, it had a threshold between $20,000 and $1 million in payroll. And that caused a lot of issues for some of our members, and that we were happy to be able to get that increase to $1.5 million. And the second part that we were able to get expanded was the ability for establishments that sold over 50% of their sales in alcohol were able to access capital, because this was not, this program at first was not available for places with high alcohol sales. if you decide to get this loan, the first, and you pay it back by December 31st, 2022, 25% or up to $10,000 will be forgiven, and the remainder will be rolled into a 3-year term loan at 5%. Moving on to the rent piece, the EDC loan. This probably doesn't impact most of you. This is really for larger businesses, but it allows you to borrow up to $6.525 million. One of the issues we heard about most was rent, and this is something you probably saw once again, our press releases, our newspaper articles, our media stories about the need for something on rent. With businesses closed, rent is your #1 fixed cost in most places, and it was really a burden for operators on the island and everywhere else. And we really pushed government hard to bring in the program. This was a bit of a dance because, rent and the relationships between tenants and landlords lies at the provincial level, but the federal government is the only one with enough money to get involved. So it really took a partnership between the province and the federal government, and I'm pleased to say that PEI was one of the first provinces to come on board with the federal government on this program, and hence last week this program was announced. There's still a few sketchy details and a few details to be worked out, and it's not yet available, but is expected to be released with all the details in mid-May. So this is a work in progress that we are still actively engaged in. So what this does is this program will basically give the small business a 75% reduction in their rent. And to qualify, you must have a rent that is less than $50,000 in gross rent. That is something we were just able to clarify last night. It's based on gross net, not net rent. So what happens is the federal government provides a forgivable loan of 50% of rent to the commercial property owner, and for the months of April, May, and June. And if the tenant is paying a gross rent of less than $50,000 and have seen their business temporarily close or experience a 70% drop in revenues, they qualify for this program. The landlord will be forgiven the the 50% loan if they reduce your rent by 75%. So essentially, the government will pick up 25%. The tenant will pick up 25%. The landlord will pick up 25%, and governments, federal and provincial, will pick up the remaining 50%. We're also able to get another point of clarity on this rent program yesterday, and that is the calculation of the 70%, because I've run into a couple operators who've said, 65 or 68%. So they have added a little clarity. You can base your 70% decline on 2019's April, May, or June revenues, or you can average the revenues for January and February of 2020. So whichever one works out better for you is the one you can use when you calculate your 70% drop. Another important point of this one is also to remember is that it is voluntary for the landlords to participate. At this point, most of the landlords have not said anything. They're still waiting for the details, and we're trying to work with governments to put pressure on the landlords to participate. So at this point, your landlord has probably not agreed to it already, just because of the details aren't all out there, but we're hoping that many of them will. So that's it for rent. Moving on to the other one that's probably top of mind right now is the Canadian Emergency Wage Subsidy Program. Many of you, if you're open or want to use this program, you would have access to this program as of last Monday. And this is where businesses that experience a 30% or more revenue drop because of COVID can receive up to a 75% wage subsidy. The 30% drop will be compared to the same months in 2019 or averaged over January, February of 2020. For March, they'll only need to show a 15% decline because of the because businesses are only shut down mid-March. The wage subsidy is retroactive and currently is only available for the periods between March 15th and June 6th. So I'm just going to spend a couple minutes here explaining this. So in the legislation that was passed by government, they said this program is open between March 15th and October 3rd. So the program is available for that 6-month period. But at this point, the only periods where you're eligible to get the subsidy is between the dates of March 15th and June 6th. That 12-week period is the only period that you can claim wage subsidy for. So 12 weeks, and at this point, between March 15th and June 6th. The program itself has a life up until October 3rd. And why the difference between the June 6th and the October 3rd is twofold. Number one is if the government, if they wanted to extend this program, wanted some flexibility without going back to Parliament to pass this. So they gave themselves some runway. So they can decide, and they haven't decided yet, can they move the date beyond June 3rd? And secondly, it gives the employer the opportunity to go back retroactively. So, at this point, you can only claim for the periods between March 15th and June 6th, but you can do so at any period between March 15th and October 3rd. So you can decide in August, if the program stays as it is, you can decide in August to go back and say, I am going to go and claim those periods from March 15th to June 3rd. However, if government decides to extend the program until August or September, you will then have the ability to use your 12 weeks at a later date. So that's important, say, for a business that's not open now in April, or might only be running with 1 or 2 employees. You don't want to waste your 12 weeks of eligibility on months where you have very, very few employees. You would rather save those 12 weeks of eligibility to a point further in the year where you have more employees, like June or July. So you can wait and not apply right now for those couple of employees, knowing that further down the road, if government does not move that June 6th date, you can go back retroactively. So, we're actively lobbying to move the date beyond June 6th. I think it is extremely important for businesses, particularly in provinces like PEI, where there's a large seasonal component, as well as if we look at the recovery plan, restaurants on the island aren't even supposed to open till June. So we'd like to be able to access that program as we're recovering through the recovery phase. So this is a huge priority for us, and because it's so important, because 1/3 of our cost is labor, that is something we're actively engaged in. The other clarity that we actually just received this morning on this program, there was a prohibition on this program for non-arm's length employees. Like, you could not offer your son or your daughter or your mother or your spouse the wage subsidy. Originally that was built in to stop fraud, so people wouldn't, fake people on their payroll to get government money. We had a lot of discussions with government, and we talked about, particularly smaller businesses, how they're family businesses where, the whole family works in the business. And I'm happy to say that now government has said that if the person, the non-arm's length person was employed in your business between January and March 15th, they will now also qualify for the wage subsidy. Another important part about this wage subsidy that we hear a lot about and just want to clarify, and that is if you have an employee on CERB that is working for you within that $1,000 envelope, you cannot put them on the wage subsidy. So the government is absolutely clear. You cannot have an employee on CERB and you claim the wage subsidy. It has to be either or. So that's going to be up to your employee to manage. You can hire them at any point, but they have to declare the income when they file for their CERB. So it's their responsibility, not yours, but I just want to make sure that you're clear. You cannot claim that $1,000 that an employee is earning on CERB as part of your wage subsidy. Moving on to other programs. I think we talked about the I think we talked about that one already. The rent, yes. Okay, other federal government supports. Government has deferred HST until June 30th, 2020. I think that's important to note. This means that HST is still in your bank accounts, and we're actively engaged in lobbying with the Hotel Association of Canada and the Tourism Industry Association to see if tourism businesses can get to keep these HST remittances. You know, it's important that they're deferred because it still means it's in your accounts, not government's accounts, because once it goes to government, we'll never get it back. Secondly, income tax payments have been deferred till August 31st, and work sharing has been extended from 38 weeks to 26 weeks. Moving on to the provincial government supports that they've provided. You know, as I said earlier, PEI has reacted quickly. They understand the importance of small business and in particular the restaurant industry, and have been very good at bringing programs to help us and our employees. One of the first things they did, as I talked about earlier, is they made restaurant takeout and delivery an essential service, once again to provide food for those in the front lines, for truckers, for first responders, for those in self-quarantine. It was important that we were there. A second thing that happened is actually like day two. And you know, this was actually, I credit with a member bringing this forward, is government shut down VLTs on Sunday night. On Monday morning, I got a call from an operator. He said, boy, it'd be great to keep the wagers that are in my bank account that Atlantic Lottery is going to take out of my bank account on Wednesday. So I went to the Department of Finance on PEI and the other Atlantic provinces. And by that afternoon, they had all agreed that any money that site holders have, any wages, would remain with the site holders to be used for cash flow purposes. And it won't simply be deferred. They will repay these out of future commissions. So you're not going to have a big lump sum bill down the road if you access this money. So that was probably the first action in terms of direct financial assistance that any government in Canada did to help any business, across Canada. That happened, Monday morning, hours after restaurants were closed. Government also introduced a loan deferral program on Prince Edward Island, and this was to really try to get the conversation going between landlords and tenants about moving rent. As I said earlier, it's the #1 fixed cost, and the government, came up with the legal agreements and the paperwork to make it easy for landlords and tenants to come up with an agreement, and guaranteed up to $5,000 a month rent to the landlord if the person doing the deferral agreement went broke. So it acted as a bit of a incentive, and my understanding is a number of small businesses did take their landlords up on this. Another important move that happened in PEI, and in particular with the liquor store closed, was the ability for us to sell alcohol with takeout. And this one, it took a lot of work, and part of it was around the regulatory framework on the island, and it took a lot of, looking for loopholes to be able to make this happen. We're pleased it happened. It took a little longer than it should. We're still asking them to move forward with the delivery part, but it has been a great little piece of business for restaurants to be able to do beer with takeout because of the long lineups at liquor stores when they close liquor stores. So we were pleased to help ferry that through. Another important thing that PEI did that no other jurisdiction in Canada did was deferred municipal taxes until December 31st, and as well as assessments till December 31st. Most other governments in Canada deferred them by a couple of months. PEI went all the way to the end of the year, which is quite progressive, as well as WCB premiums have been deferred until June 31st. Moving on, we have, in terms of direct financial supports, this was one that was actually quite innovative by PEI. They introduced a business adaptation advice program, which is a $2,500 grant. So that's free money. And what that grant was to allow you to hire a professional to give you advice on how to make your business adapt during these times of COVID-19. It could include HR, it could include IT, it could include financial advice, or even marketing advice. So, that's a program with essentially free money. So, I hope you operators took advantage of this program. Two other ones that we're quite pleased with that were introduced was, there were a large number of employee programs and like Sobeys cards and bridge financing and one-time payments for employees. But this is a pretty good one. It's called a Tourism Assistant Loan Program. There are repayable loans up to $1 million for any tourism business, and food service establishments and lounges are included in this category. It's a repayable loan with interest and principal deferred for 18 months. It's a 5-year term with a 4% interest rate amortized over 20 years. So we're happy that will include restaurants. The second part this one is once again is very innovative, and it's the only jurisdiction that I know in Canada that has such a program. And once again, restaurants and lounges are included in this. It's called the Tourism Interest Relief Program. And what this is government will reimburse the interest on term debt acquired before April 1st, 2020. So if you're paying a loan on the, that you use to build your establishment or any type of debt you acquired other than third-party loans, such as relatives or third-party lenders or lines of credit, government will reimburse you any interest on these loans for a period of 18 months. All you have to do is to show that you had a 30% decrease in revenue for that month, and you apply monthly. So, so if April, your revenue is down over 30%, and you're trying to have a loan that your interest payments are still due, government will pick up the tab for the interest portion. Because generally the way loans are working with the financial institutions is they'll re-amortize the capital, the principal, but they'll require you to pay the interest payment. So here government is picking up your interest payment for a period up to 18 months. So that's, once again, that's a pretty innovative program that I've not seen anywhere else in Canada. Last but definitely not least is the, if you could switch it, please, would be the working capital financing. It's a loan up to $100,000 for payroll, rent, utilities, 4% over 5 years. And then we have a couple, relief worker, other programs that, if you reduce the hours of employees, government will reimburse you up to 8 hours per week less to a maximum of 250 per week. So that was only available for 2 weeks, and it's just another program, quick off the mark to bridge the gap until the federal programs to kick in. Switching slides. At this point, I'm going to move to the final phase of our discussions, which is a reopening plan. And once again, this is a place where Restaurants Canada has a huge role to play, and it's something we're actively engaged in. As you know, the province has released a 4-phase reopening plan. It includes physical distancing, health screening, physical barriers, hand washing, surface cleaning, masks, face coverings, monitoring, testing, and contact tracing. The first phase begins tomorrow. Unfortunately, we're not included in the first phase at this point, unless things change. And it's been made very clear to me that things can change for the better or for the worse. Reopening is set for June 12th, where restaurants will be able to open. There are some restrictions on the openings that quite frankly, we're not pleased with, and we're continuing to engage with government to see if we can get them changed. The first one is the date. That does seem a little bit longer than New Brunswick, where they're set to open in 2 to 4 weeks. So at this point, as of yesterday or wherever the plan was released, your restaurants can reopen for PEI residents only. No recreational spaces such as pool tables, dance floors, VLTs, no buffets, no sharing of utensils. Only members of a household can dine together, and you'll still have the required other restrictions, social distancing, and other risk mitigation measures. So, I think when we look at reopening, as I said earlier, we're not going to flick a switch and it's going to go back to what it was last July. This is a process, and it's going to be an incremental loosening of the restrictions, and it will still involve, for the foreseeable future, social distancing and risk mitigation measures. So as I said, we're engaged with the government. We're talking about some of the things they brought forward. And just this morning, we presented to government, if you could flick the switch there, please, our reopening plan. So what we developed was a number of principles and guidance that we're looking for from government on some particular areas in terms of social distancing, health and hygiene, and equipment. And what we've done is put together a best practices guide that we put together based on what we're seeing happen in Europe, the United States, and other jurisdictions that have dealt with this disease. And we really want their feedback on a guide to help members get through this. So once we get a little more guidance from government, which we hope will be within the next week or so, we will take this guide, we will adapt it to the requirements of the government, and put a full operational guide available to you, the members. This will talk about all the different areas of your business, what are best practices. It will include checklists, templates, all to help you meet the requirements of a provincial government in terms of risk mitigation, social distancing, and getting through this virus. As I said, I only submitted this this morning. I've already heard back from very, very, very senior officials who have said this is fantastic. This is what they're looking forward to receiving, and they want to work with us as close as they can to mitigate any of the risks to businesses, so that we can open quicker and faster and as safe as possible. So I think at that point, I'll just move on to the very last point about reopening. Reopening, as I said, talks about risk mitigation and what we're doing to be open. But I think there's a very important role for still us to play in the reopening plan is continued assistance. As I said, it's not going to be back to normal. We're not going back to normal in the short term. If you're only open at 50% capacity for the next few months, tourism's going to need to be down. We're going to need continued assistance. And that's what we're telling government. We're at the table telling governments, these programs can't end this month or next month. they have to be available for a longer period because it's going to take a long time for our industry to cover. And, government is keen to help us in other ways. There are already lots of discussions going on in terms of marketing, stay-at-home marketing, marketing first to your local communities, and then, when borders come down, other closer communities. And, even things like we're doing to Restaurants Canada is CanadaTakeout.com. I don't know if you've registered your business. If you're doing takeout and delivery, you go to this simple website, CanadaTakeout.com. You put in your name of the business and the address, and someone comes on and types in their address, and all of a sudden they see what businesses are open in their neighborhood. So I'd encourage you all to do that. It's just one of the many things to do. We're also at Restaurants Canada, we're continuing to try to provide you with advice, with information, with webinars, research, anything that you can do to help you as we move forward. I'm happy to take any questions, or if you feel more comfortable about emailing me a question, I'll be happy to return your call or answer your question. And as I said, I appreciate the support, and Restaurants Canada appreciates your support over the years. And it's our job to support you through this time of crisis. And, I can assure you we are here each and every day fighting provincially and nationally to make sure your interests are heard, your interests are carried forward, and to try to ensure that your interests are protected. And with that, I will stop, and thank you again for your time, and good luck with the reopening. And if we can be of any assistance in any way, please let us know. Thanks very much.